This man took a cement stock and made it rise 4,400%. Not tech, not gold, cement. And he did it with money that did not exist. No hacking, no printing press, just a loophole, a smile, and a banking system too slow to notice. By the time it ended, millions of families were wiped out, and the scandal climbed all the way to the Prime Minister of India. This is Harshad Mehta, the man India called the Big Bull, and the paper empire that took an entire stock market down with it. Start at the beginning. It's the early 1980s in Bombay, today's Mumbai. Harshad isn't rich, a young man from a lower middle-class Gujarati family, working ordinary jobs, looking for a way up. But he had one real talent. Markets don't run on numbers, they run on emotion, on fear and greed, and he could read both. He enters the stock market as a junior, a sub-broker learning the floor from the bottom. Back then, the Bombay Stock Exchange was a roaring physical pit, hundreds of men shouting prices, trading paper certificates by hand. Harshad looked at that chaos and saw an opportunity nobody else had the nerve to take. He starts his own firm, Grow More. He doesn't want small commissions. He wants to move the market itself, and that takes enormous money. So where do you find a near bottomless supply of cash in 1990s India? The banks. Banks had to hold part of their money in government securities, and they constantly lent those securities to each other to balance their books. Now watch closely. This is the whole trick. Instead of moving the real bonds, the selling bank handed over a receipt. A bank receipt. It simply said, "Trust us. The securities exist." Harshad positioned himself as the middleman, the broker who sat between the banks and made the slow paperwork disappear. Then he found the crack. He had small banks issue bank receipts backed by no real securities at all. Fake paper. Two small banks became central to it, the Bank of Karad and the Metropolitan Cooperative Bank. He took that worthless paper to bigger banks who handed over real cash. Mountains of money secured by nothing. And he knew exactly where to put it, straight into the stock market. He poured the borrowed money into a few stocks, concentrated, not spread thin. His favorite target, a cement company called ACC. He buys ACC at 200 rupees. It climbs to nearly 9,000, a rise of 4,400% for cement. Ordinary investors see the price exploding and rush in, terrified of missing out. The whole index quadruples. The press crowns him a superstar, the outsider who beat the system, a sea-facing mansion, imported luxury cars. He was the face of money itself. But a wave built on fake paper only holds until someone looks underneath. Journalist Susheta Dalal looked, and in April 1992, she published the story that broke it open. The collapse came fast. Banks realized they held fake receipts worth a fortune and demanded their money at once. To pay, Harshad had to sell, and the market went into freefall. The ones destroyed weren't the insiders. They were ordinary families who bet their savings because a folk hero said it only went up. Out on bail, he even claimed he bribed the prime minister with a suitcase of cash, an allegation never proven. The system patched the loophole. New rules, electronic trading, tighter oversight. They fixed the paper. What they couldn't fix was the fear and the greed that powered it all. The paper changed. That didn't.